Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 5th, 2021. It's 2:37 p.m. as I'm starting the video, so we have a little better than an hour to go left in the trading day. Complete humdrum day, nothing much going on, nothing new to report in the indexes, most certainly. Same story. This is a 60-minute chart of QQQ, and we're just kind of locked in this recent trading range here for the last week or so there. So there we are, slightly higher, almost an equal but slightly higher new high gives us a divergent high. There's a negative divergence there on the indicators. That was the last divergent high there, followed by that correction there. So again, nothing new to report there. Level to watch, I think, is about 361.83. A crack of that break, or a solid break of that level, I should say, should take us down to any or all these targets listed below. But until that happens, we grind around. S&P 500, same thing, grinding around for the last week or so here. There's your range. Bottom of that range right here is about 430, almost 436. You have a gap right there. You have a reaction low on it, another reaction low, reaction high there, several reactions above from above right there. So that's the magic number for SPY to get a sell signal. And of course, as I said yesterday, if we happen to make a marginal new high anytime soon, it will simply be an extension of this divergent high we put in back here. You can see the indicators are clearly lagging behind. So I don't expect any fireworks anytime soon in the S&P unless we break to the downside. I don't see much of a risk of an upside explosion at this point if we happen to break out above the recent highs. Yeah, and I haven't updated IWM, the small caps, in a while, just because there's really nothing there that stands out to me. We had a divergent high about a month or so ago back here, and then a correction. And since that correction, we stopped going down, but we've really gone mostly sideways. Same story. So we have resistance there about 224.50, and then support around 215.50 right there. So again, can't really make too much of that. Better opportunities elsewhere. Although today I'm not seeing a lot going on. We'll do a quick update. Let's look at our crude oil. Still one of my favorites, but there's going to be days, where you go against the trend or consolidate. The current trend being bearish after this divergent high right here. We've been moving lower. So far, that's a series of lower highs and lower lows. We just need to go ahead and take out that low, which I think we will. But again, right now we're kind of in no man's land. That means between support, we have support down around 65 to 66, and resistance 70.42. That was the last objective short highlighted there on the kickback to 70.42. And that's a little snapback rally today. That's coming off this divergent high right here in this little wedge break. So again, we can't really say where we're going to go from there, but we already back tested 70.42, so I don't believe we'll do it again. And when you're in a downtrend, you can use any snapback rallies like this to add to. I prefer to kickback rallies to resistance ideally, but depending where you're at and how you're managing your positions, we're up 1.25% today. Probably very minor resistance there. You have that previous reaction low, and that's where we're at right now. So again, I'm still favoring a move down here at least that 65, 66 level, and quite likely more in the coming weeks to months. I mentioned wheat and corn recently. Again, I'm favoring corn this time around over wheat. Wheat did break that uptrend line I told you about the other day. It also has now come back in and failed the breakout. Not by a whole lot, but we're a little below that 1767 level, down around 713 plus the trend line there, little divergent high. So that certainly doesn't help. I wouldn't go long wheat. If you're already long, I would consider a stop somewhat below the lows, because that's again doesn't help as long as we're below that level. So you want to see it ideally turn around soon. And again, depending on how much you're targeting, you need to consider now which point you want to stop out. And if we pull back there, that may provide an objective long entry. That was a former target back there, 764.76. Down today by about 0.6%. But again, corn I think is as I said, better risk reward profile. I think less downside risk and more upside potential, and it is up today about 1.2%. So right to that resistance, 558.50. But we'll call it 558.05 or 558. support down here, so corn's been bouncing in this range here. Needs to pop that 558 level, and if so, you can see my next targets, which I've already covered recently up there. And if we go to the downside, well, you can add a line. I'm going to add it for you right now. That really should be the kind of the line in the sand. That's support right there, about 540.72, and that is defined by the recent reaction lows that we've had there in corn. So that's it, kind of in a trading range, and when you're in a range, you bounce up and down. You can trade that range accordingly. That means sell when you get up to the top, or short, ride to the bottom, cover a short or go long, or wait for a breakout if you're long. I'm still, like I said, near-term bullish on this one. Not crazy about what's going on with wheat. And I certainly wouldn't add to corn right here because A, we're at resistance, and B, wheat just failed that level. But for now, time being, sit tight and manage your stops to the downside and just let it ride. Remember, commodities are in a bull run, bull market that is, and this one kind of bigger picture for months. We've been consolidating, and that's fine because we've had some huge run-ups over the last couple of years in most of these commodities, and they're taking a breather. Again, bigger picture taking a breather, and we'll continue to actively trade, as the opportunities present with positive divergences, breakouts above falling wedges, things like that. Gold's down today, nothing big, down a little less than 0.5%, and still above that support buy zone right here, and right about on this. I have that line at 1807 and change, and we're at 1805.90, so call that 1806. So really right about on support. Not going up, not going down right now, or at least lately, but that's your trading range right there. We need to break the top of it. We've had numerous tags, and so it's still an objective long every time it comes down to that support buy zone I've been highlighting for weeks now, as long as it remains above it with a stop somewhat below. The dollar and euro aren't doing much today. I'm surprised gold's down at all. We have, let me pull that up for you. There it is. DX US dollar futures. Here's a story on that. Bearish rising wedge pattern, divergent high right there. There was our sell signal breakdown. It's been walking lower, and it's rallied right back to this downtrend line. And so it's flat today, slightly down, and yet gold's down too. Don't take too much into that. I always talk about the correlation between gold, or the inverse correlation between gold and the US dollar, but it's not a day-to-day, minute-by-minute thing. It's more of a trend. Now, usually, if you're going to get a big move down in the dollar, that will almost always usually correlate into an up in the dollar. But when you're almost flat, don't read too much into it. So today's just kind of a go-nowhere day for both of them, based on where they're at. And you also have the dollar at 92 to 86 resistance. So if the dollar could clearly break that out, that would be bullish, but I believe it's going to take another leg down, and that should correlate with another leg up in gold. And here's a euro, E7 euro futures, still kind of struggling with this downtrend line, and 119.15 resistance. So that's the level that we need to pop. So far, this was a nice, clean, bullish falling wedge. We broke out, back tested, almost like the dollar's bearish rising wedge in reverse, and went up, hit resistance, and as expected, we had a reaction, two reactions so far, and that's it. So there it is. We need to break above 119.15, and doing so should run us up here to we'll call that 120 right there in the euro futures. And if that happens, if and when, that should be bullish for the gold and of course silver as well. And as far as individual stocks go, the two that I've been highlighting the most recently are AMC and DM. AMC, Ape's getting a little giddy today. Yesterday, we triggered a short, the uptick rule, and which bans, stops or slows down short selling. You can only short at an uptick, no longer at a downtick. I saw a lot of buzz on social media, and some people who follow their stock told me about it, and they're getting all hyped up. That's not a good sign. They're trying to spin it that way. When the short sale rule is triggered, short sale restriction, that's because the stock is down big, as it was yesterday, over 10%. And that's usually during pretty strong downtrends. And this one's clearly in a downtrend. So bottom line, where all this is today is a snapback to resistance. It's again, you can only short on a downtick. I'm sorry, an uptick, and that's going to slow down the downside momentum. But we're at pretty much a snapback to resistance, so that in itself is an objective short entry. Might be able to add a downtrend line here as well. So if it goes a little higher, that should cap a bounce back. And I still favor a move down again to at least T3, and that's about 1460. And that's my, again, 60-minute targets. On the daily chart, I have longer term targets all the way down here to potentially almost the $9 level, or right around the $9 level. And the other one I've been highlighting recently is DM, Desktop Metal. Kind of not going anywhere since the breakout. We had a breakout here, and I highlighted it shortly after that, I think on the back test. Went on, extended. We still have positive divergence here on this daily time frame. You can see a little downtrend line I just added to that needs to be taken out. It's right about here. And if that pops, we should run up to that $10 level. My targets, again, were shared on this 60-minute time frame. It's up today about almost 4%. It was up a little over 4 earlier, but that's not much for a stock like this. So really I'm looking at this wedge type pattern here. Falling wedge, divergent low, there's a positive divergence. So it's looking good, and again, earnings is coming up soon, a couple weeks or less. If the charts are any indication, which most often, not always, but usually they are, this one should rally after earnings. I don't think we're going to, I can tell you with a pretty good degree of confidence, we're not going to hit this T4, let's say, before earnings. It would be unusual to see the stock rally that much. But after earnings, I think that's quite possible. If it goes the other way, that's what stops are for. Just remember when they report, which is on or around the 16th, it's not the initial reaction that matters. So whatever happens in after hours, wouldn't read too much into it. We'll see how it trades the day after. So that's about it. Let's keep this one short. Again, just not a lot moving. I'm watching screens all day, looking at things everywhere. I did step out away from my desk for a little bit to knock off an errand, a couple errands actually, because there's just nothing going on. And I'll continue to scan the charts and look for something. So we'll wrap it up here. And if I don't see anything else today, we'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.